Hello traders, Gary Wagner here. Approximately 1 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd day of January 2021, and this is the daily report for gold and silver, our weekend review, and what a week we have seen. A new administration, a new kind of format about handling the pandemic and the economy. Hopefully it will work out much better than it has over the last couple of years, but it does seem as though we are making some progress. We saw that in the U.S. equities markets as they rallied. At the same time, the $25 plus spike on the day of the inauguration told us uncertainty still exists. Let's take a look at our charts and current pricing. We certainly saw gold prices rise on the week, although they did close lower today. The big day was Wednesday, the day of the inauguration, when the market traded from roughly a low of $1,830 to a high of $1,870, settling just below that. Yesterday, as well as today, resulted in lower closes. Gold futures as well as Forex did lose ground today. We are looking at pricing for the most active February contract, down $10.40 at $1,855.50. Over to spot, current fixed price is $1,854.80. Quite an interesting week. In terms of gold pricing, it did close higher on the week and actually opened just below the close of last week, creating a simple two-day pattern called an engulfing bullish. Now, typically we take this with a daily chart, but to take it, we would need to have a confirming candle, and a confirming candle such as down here where we have a bullish harami would be the following day, containing a higher high, higher close, and higher low. But in the case of this week's action, we had some very interesting occurrences. One that I'm not really happy about was the fact that in Australia, Monday morning when trading opened, this would be on the 17th there, and then following into the 18th, which was Monday here on the mainland, we did see gold trade to a low of 1,800, effectively knocking us out of our long positions in gold as well as silver. But then it had a very, very nice recovery, although it did close below a key level, the 200-day moving average. On Wednesday, this is the day of the inauguration, we actually saw the market open below but close well above not only the 200-day, but the 50-day moving average. We made a higher high yesterday, and we made a lower low than the previous day today. And what is interesting is the low did go through the 200-day moving average. It did go through the 38.2% retracement, but even closing lower, it managed to close above those price points, except for the 50-day moving average. It is for that reason my recommendation is to maintain our neutral stance in gold futures and Forex, and we will maintain our long position in GLD. The relationship between gold and silver prices recently has been most interesting. First of all, when gold hit its all-time record high back in August of last year, 2088, silver only made it to $20 shy of the record high. That being said, although gold traded to a new high, silver did not. This is the high that came in August. Unlike gold, it never came close to the 200-day moving average, let alone closing below that, first. Secondly, you can see we're about to have a golden cross, it appears, between the 50 and 100-day moving average, which is why I have maintained a more bullish demeanor for silver than gold recently, and maintain that there's more upside potential in terms of that percentage gain. The caveat is increased volatility when compared to gold. For right now, we will maintain a neutral stance in silver futures and Forex, maintain our long SLV positions. GLD did close lower on the day, giving up about 0.8%, $1.38 per share, currently fixed at 173.90. Of course, we got in at 172.14, so we do have some profits in there. We are going to maintain our current long and going to maintain our current stop. iShares Silver Trust, or SLV, closed at 23.66, down about 2% on the day. When we entered that trade, we got in at 22.95. So we also still have profits in that position. Maintain your long, maintain your current stop placement. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.